What's up, everybody? This is Lamine from InvestingSimplified.net. Today is Saturday, August 14th, 2021. Welcome to our weekend market analysis. Starting with the ES Daily, as we can see here, S&P made some marginal progress this week. It gained about 44 points and some change, closed right at 4462.5 on the futures, which is 4467.99 on the cash index. However, looking at market internals, we have a little bit of concern about the market. Our strategy going into next week is to hopefully see some kind of a pullback anywhere from 43.80 up to 43.25 zone. 43.25 zone is the key level that we are monitoring going into next week to see if market can give us a potential opportunity to go back in, because looking at market internals and some of the sentiment indicators we monitor, it suggested to us that the potential of a short-term pullback, the probabilities are high. However, we will pay attention to price action on a shorter time scale to see if that will come into fruition. So what we are monitoring going into next week, first key level 43.80, and the level that we really hope to see market to pull back down to is 43.25 zone, which is right around the 50-day moving average, because 50-day has been the key level where buyers tend to step in for a period of time. So any test right around this highlighted zone and this trend line, which comes right around with this blue trend line, which is the 50-day, we will be happy to go along as long as that key level holds. RSI still not overbought yet. It's really not much to take away from RSI. Basically sitting at 66.62 as of Friday's close. Until we get above 70, it's not really telling us much. So with that, let's jump to NQ. Looking at the daily time scale of NQ, as we can see here, NQ has been going sideways for the past 3 weeks. S&P made a marginal new high. As we can see, if NQ cannot break above this trading range next week, if we start to fail right around this resistance level, this 15,130 zone and some change, if we start to back off and start to roll over and then come towards this lower range of the trading range, especially if market break to the downside of this trading range, our expectation is S&P will follow through, because tech is the market. If tech starts to weaken, S&P will follow through. So this is what we are monitoring. NQ very carefully right around the resistance zone to see if we are going to see any rejection into early next week, which will indicate to us that a potential pullback is probably unfolding. How much that will be, nobody knows. We will just have to continue to monitor and see where market find buyers. That will indicate to us that, okay, correction is over. Now market is on its way to new highs, or market is probably going to be in a correction for a period of time. So that's what we are monitoring into next week. Looking at RSI, it's not really doing much, sitting right around 62.24 as of Friday's close. Not overbought or oversold, not much to take away. So let's jump to TNX. Looking at the daily time scale of TNX, as we can see here, yields collapsed on Friday after it got rejected right around the key level, the 50-day, and this trend line that has been in play since May 21st. The University of Michigan consumer sentiment came out very disappointed. The current conditions as well as expectations all collapsed, which was reflected in the yields immediately. 10-year note was down 5.12% at the close of business on Friday. It basically fell back into this trading range. So the question is, going forward, are the yields going to continue to drift lower, which means we come back to this trading range, which is going to increase the probability that the 1.12 zone that was tested and the double bottom was formed, there is a possibility for yields to come back to that level again. And if that's the case, we will need to be very careful with value sector like IWM. Banks can start to weaken if yields continue to pull back into next week. So we will definitely keep an eye on the rates and see what happens going forward, because weakness in yields will definitely impact economically sensitive sectors. So let's take a look at the dollar and see how the dollar index was impacted based on the weak economic data. Looking at the dollar index, as we can see here, dollar dropped significantly too on Friday when the University of Michigan consumer sentiment came out. Of course, all the three components came out very, very weak. Yields dropped significantly, dollar index dropped significantly, which was the best thing that has happened to gold, and gold rallied strongly on Friday. It gained about almost 27.1.5%. So the weakness in the dollar and the yields, it's something to pay attention to going into next week. If economic data continue to disappoint, this will be the two indicators to pay attention to how price react react as those information become available to us. Dollar continue to be in this range, 91.5 and 93 zone. We still have not made any meaningful breakout to either direction, and we have been discussing this range for weeks now. Until and unless we see a breakout to the upside or to the downside, it's really nothing to do here on the dollar index. It's more of a wait and see mode. Until then, we will continue to monitor price action and pay attention to what the data is telling us. RSI is not really telling us much. We are not at an overbought or oversold territory. The same thing on TNX and ES and NQ. So with that, we will end the review here. If you enjoyed the video, please subscribe, share with friends, give us a like. Please note anything stated here is our opinion. It's not a recommendation to buy or sell any securities. With that, we hope you all have a great weekend. Bye for now.